Treatment of goodwill. So, transaction and journal entries. When there is a goodwill of the entire firm is raised and retained in the business. So, at that time, goodwill account data to all partners capital account. This goodwill account data to all partners capital account, the amount will come. There's word profit sharing ratio. Word profit sharing ratio. Word profit, the what was given in the word profit sharing ratio, that will come in a goodwill account data to all partners capital account. That goodwill appear in a new balance sheet as well. And second one is when goodwill of an entire firm is raised and then it is written off at that time. So when goodwill is raised, goodwill account data to all partners capital account, word profit sharing ratio. And when goodwill is written off, continuing in a partner's capital account, that written off amount will continue in a partner's capital account. There is new profit sharing ratio. So goodwill to goodwill account to goodwill will not appear in new balance sheet. This goodwill written off amount will not be appear in the new balance sheet. And next is third one is when goodwill is raised to the extent of retiring partners share and retain in business. Goodwill account data to retiring partners capital account. Goodwill will appear in new balance sheet to the extent. And next is of when goodwill is raised to the extent of retiring partner share and then written off. This amount will continue in a partner's capital account data to goodwill account. Gain ratio. Goodwill will not appear in a new balance sheet. And the next fifth one is in case of goodwill already appear in the balance sheet. The difference in goodwill amount can be shown either in a profit and loss adjustment account or revaluation account. In a MD ratio or in a partner's capital account. In a current account. So these are the treatments of goodwill. And now transfer of reserve fund to a reserve fund or a journal reserve accumulated in a accumulated profit or loss. So on retirement of a partner, any reserve accumulated profit or loss is transferred to capital or current account in their profit sharing ratio to all partners or only share of retiring partners to his capital account or current account as for the instruction given in the problem. If the it will be mentioned in the problem, so that will goes to the current account or a capital account, his capital account or a current account. So if any types of reserve accumulated profit is transferred to the entry will be all types of reserve and accumulated profits account data to partners capital account or current account. And all again any accumulated loss appearing on asset side of a balance sheet is transferred to all partners in their profit sharing ratio. In the entry will be all partners capital account or current account data to profit and loss account, being accumulated loss debited to all partners and current account. Now we'll see what is the revaluation of assets and reassessment of liabilities. What are the changes will happens after getting the retirement? So first, when the partner retires from the business, it is desirable to revalue assets and liabilities to bring their values at the correct position. So this is necessary to do that revalue the assets and liabilities after getting the partner's retirement. So the benefit of such change in the value of assets and liabilities will be given to the retiring partners as well. So after preparing a balance sheet, new balance sheet, so that will be benefit for the retiring partners also. And to show the change in the value of assets and liabilities, revaluation account is opened. After showing all the effects in a revaluation account or a profit and loss adjustment account, the balance sheet appearing in the account will be transferred to partners capital account in their profit sharing ratio. And adjustment of capital. On retirement of a partner, the continuing partner may decide to rearrange their capital in their new profit sharing ratio. For this purpose, the total capital of the firm is divided among the partners in their new profit sharing ratio. The word profit sharing ratio, they won't consider it. They again they will change the profit sharing ratio, that is new profit sharing ratio, and New capital balance is then compared with the latest capital balance of each partner, and surplus or deficit in individual capital account is calculated. Such surplus amount may be withdrawn by the partner, that is paid to partner, or transferred to current account or loan account. So this surplus will transfer to his retired partner, the current account or a loan account. Deficit may be brought in by the partner or transferred to his current account or loan account. So this is the adjustment of capital. So ascertainment of retiring partner share of profits on retirement. If a partner retires from firm on any day during a accounting year, then it is necessary to compare profit from date of last day balance sheet to date of retirement. So date of balance sheet and the date of retirement will be considered. So profit of current year is calculated either on the basis of the last year profit or average profit. So proportionate profit for the part of year, that is from the date of balance sheet to date of retirement, is calculated. Share of a retiring partner is calculated on the basis of proportionate profit, that is a old ratio and new ratio. So old ratio. So next is for transfer of such profit or loss, following journal entries are drafted. So what are the journal entries are given? Profit and loss suspense account data to retiring partners capital account, current account, transfer of to retiring partners capital account, current account data to profit and loss suspense account, and total payable amount to retiring partner. So total payment, how they are going to pay the amount for the retiring partner. Lump sum, the entire amount payable to retiring partner is paid in a one installment at a time. So at that time, retiring partners capital account data to cash account or bank account. And installment, if they are going to pay in an installment. If it is a lump sum amount, this is the journal entry. And if it is an installment, retiring partners capital account to retiring partners loan account. If it is a if it is an installment, when interest charged on loan account, interest account data to retiring partners loan account, and when interest paid in cash, retiring partners loan account to bank loan account data to bank account. And if the total amount due to retiring partner is transferred to loan account, retiring partners capital account data to retiring partners loan account. And if amount due to retiring partners partly paid in cash and balance due transferred to loan account, retiring partners capital account data to cash or bank account or a retiring partners loan account. So these are the methods. So if it is a lump sum, if it is an installment, if it is a interest, and if it is a interest paid in cash, these are the journal entries are going to come in the problem. So you will come to know deeply about these journal entries in the problems. Thank you.